Hello, beautiful people. So yeah, today, super excited to have a panel about the DeFi renaissance in America that we've been seeing the last couple months. So yeah, just to kick off, maybe I'll let you guys do a brief intro about yourself, your project, and maybe like sort of your presence in the US.
Sure. I'm Eugene. I'm the co-founder and CEO at Ellipsis Labs. We do a bunch of different things in DeFi on Solana. We have a order book DEX called Phoenix. We're the largest market maker on Solana. And we're working on the Atlas Layer 2 blockchain. We started the company more than 2 years ago, 2.5 years ago in New York City. We've never really considered leaving, and it's really great to see so much of crypto coming back to the US and back to New York City in particular.
All right, Merlin, co-founder of Morpho. So Morpho is a lending protocol deployed on multiple chains. It's one of the largest one with 6.5 billions of dollars in total deposits. We are the largest lending protocol on Base, and I've been integrated by multiple US centralized exchanges, fintechs, and US-based protocols.
Awesome. Yeah, and I'm Monet Supply. I work for Block Analytica. We're a risk firm in DeFi. I'm the only American on the team, but we are hoping to expand in the US when we can. So maybe the next thing I'd be curious about is thinking about sort of the new sense of regulatory clarity that we're starting to get in the US. Do you guys have a sense of what American DeFi might look like once we have some of these key pieces of legislation like stablecoin bill, market structure, a little bit more ironed out?
So first of all, I think it depends what actually passes. It looks like the stablecoin bill is pretty likely to pass. Market structure seems kind of up in the air. I'm not super plugged into what's going on in DC necessarily, but my sense is if we get both of these bills passed, almost no matter what they look like, it will at least provide some foundations for knowing what is like actually permitted. There's a lot of carve-outs in these bills for sandboxes for innovation, which I think is quite positive, even if we might disagree about some definitions around the margins. I think like one theme of operating in DeFi in America over the last 3 years or so has been everything is a gray area, everything is all up to interpretation by the regulatory agency. And we've always viewed that as basically an abdication of responsibility by Congress, and now it seems like they're actually taking it up. So I think almost any regulation here is likely to be a good thing. We're going to have a little bit less discretion by the regulatory agency, which is something we'd view as friendly today, but not guaranteed to be friendly in perpetuity.
Right. I think like US regulation is becoming clearer, and with the Genius Act, etc., it will push people to innovate and use more and more stablecoin, because now you can do it, or at least you know the rules and you can play with them. So I think it's great for US companies, US-based companies, but at the same time, because of that clarity on stablecoin, it can increase the reach of stablecoins, US dollar-based stablecoins, into other countries. So when I'm thinking about we deployed on World, which is not accessible yet in the US. Most countries are like in Asia, East Asia, South America, Africa, and there's a lot of usage of USDC, USDT on those platforms. And I do think that clarity in the US will also create and push people to innovate and increase their usage and their exposure toward crypto in general, just because they need it. And now that there's more clarity, more fintechs will be able to integrate that into the payment system, into to provide earn and borrow saving account to their users. So I think it's great for US, but it's also great for any country in the world.
Nice. Yeah, agreed. You touched on the idea of like fintechs offering savings accounts with stablecoins, which I think is it's interesting because one of the maybe the most talked about parts of the stablecoin bill is potential prohibition on regulated U.S. stablecoins paying interest. It's almost like sort of a way that the banking industry is getting a little bit protected. So I'd be curious if you guys have a view on, is that positive for DeFi? Maybe it like carves out an area where you can have a niche, or is that going to hold DeFi back if they do prohibit paying interest on stables?
Maybe I can take this one. So it's true that you can't provide the yield from the T-bills backing the stablecoins, but if you create your own product, for instance, on top of Morpho, if you lend out those USDC or USDT, you can earn the yield. So you can integrate that in a saving account. So there's another way to kind of expose users and get access to that yield. It's not through like the yield of the T-bills, but through the yield that you can get from like lending those assets on DeFi protocols such as Morpho. And this is something that we are seeing more and more. And it's easy to build now that DeFi is mature enough to offer those use cases and also have that abstraction layer that even Web2 engineers or because fintechs and centralized exchanges do not really have often Web3 and smart contract engineers, so you need that abstraction layer, but once you have it, you can provide access to like anyone in the world to like almost risk-free rate via lending.
Yeah, I also think it's not super likely to be a huge deal. I think the main thing that is happening here is if you legitimize the stable coins and you ensure like basically like government says they're safe, the US government's not going to try to rug all the stables at some point in the future. The product market fit for the US dollar around the world is just like so insanely high that this like marginal 4% just doesn't matter whatsoever. In more than 100 countries around the world, the currency that people want to hold their savings in is the US dollar. They will go through hell and high water to get access to the dollar over the native currency in their locale, and they're just not sensitive whatsoever to 4% of marginal yield. But yeah, it obviously creates some inefficiency in the market, and I think the permissionless innovation layer in finance or DeFi is quite likely to compete that margin down.
Yeah, definitely agreed. You guys both work with protocols that are like super integrated with the stable coins, and I would say that USD has been kind of the standout, like the most demanded stable coin, and possibly some of this regulatory clarity in the US might cement that. But do either of you see any like sort of upstart competitors, like any other foreign currency stablecoins that users are excited about that might challenge USD in your protocols?
I imagine you end up in a world where like you have at least 90%, 95% US dollar dominance. There might be some other currencies that are used for remittances or some local currency that needs to get cashed out into. But to the extent that people are holding savings on chain, for the vast majority of people, I think it's going to be dollars for a very long time. I think even within the crypto world, the crypto community, talking about BTC or Ether or other coins as stores of value, we still see almost everything denominated in dollars, and I think there's a good reason for that.
Yeah, I think I agree that the dollar will still continue to be the prevalent assets, stablecoin in the place. When I'm seeing like the European market, we don't have like euro stablecoin that have like a product market fit right now. With Mika, etc., it's taking a lot of time. There's a lot of hurdles for wannabe champion in Europe, and we have Circle that I think will try to push more on that front, but it's still like just barely scratching the surface. While like when we compare to like USDC and USDT, their market shares like phenomenal. So I don't expect like a euro stablecoin to, or even other currencies to overcome the US dollar anytime soon.
Nice. All right, America will remain first for stables with any luck. Maybe I'll pivot here. I think the US used to be a little bit of a dirty word for crypto and crypto projects in particular. You would always try and sort of duck whether you had a US presence, whether you had people working there or providing services there. Have either of you guys felt the vibe shifting on that? Are you more willing to present as like, you know, a US crypto enterprise or having a US presence, being willing to serve US users?
I mean, for what it's worth, Ellipsis Labs is always presented as an American company operating proudly out of New York City. But definitely feel the vibe shift, definitely feel or see many more companies that spent a very long time saying on Twitter like, oh, we are technically based in the Cayman Islands or whatever, erasing all of their old tweets and saying we're proudly American again. I mean, I think at the margin it's definitely good for the U.S. to onshore innovation to the extent that it's possible. But I think right now is very much just vibes, and it is coming from the expected future behavior of the regulatory agencies. There were, I think, a lot of poor incentives set in the previous administration, where we heard so many stories of, hey, like you're going to go try to engage with the regulator in good faith, and then a month later they hit you with the Wells notice because you let them know that you exist, and that turned out to be the actual mistake. We hear a lot more of what seems to be like more productive engagement with the regulatory agencies, and I view that definitely as a step forward.
Right. On our side, so the Morpho Association is a French association, so sorry about that. So we started, we're still like a French association, but now we are expanding in New York. What we are seeing right now is like there's a big FOMO from institutions in the space, especially in America, to go on chain ASAP. And so there's a huge work on the education on our side to do this, but to onboard them on chain and do that education, you need to be there in person. So there's like a strong push on our side to dedicate a lot more resources, especially in New York, which is like the biggest financial place where you can. And so we are expanding our reach here. We do think that the biggest growth factor for us is the US, is in New York. Of course, we don't forget the rest of the world, South America, East Asia, which are like big markets as well. But this is definitely something that we have in mind. And also for instance, our GC is US based, and because US is kind of leading like the regulation, and so it's more important to have like fully compliance on the US soil, and then because the rest will be somehow derived from what the US does on their in this region.
Yeah, maybe I'll sort of pivot to talking about compliance a little bit and different trade-offs that you might see with that. So the U.S. is, at least prospectively, it's going to be ironing out its regulatory system a lot more. There will be a lot less gray areas, but there's also going to be, potentially more rules to follow, rules of the road that you need to kind of adhere to. So how do you think that you'll be able to compete with other protocols who might be in kind of more Wild West jurisdictions? Do you think that could be a competitive challenge for you, or maybe a competitive advantage?
I think what most teams really want is just a clear set of rules that need to be followed, and you also really want to live in some incentive system where other folks are not rewarded for taking on significantly more risk, where you're not like penalized for following the rules. So I guess like the cost of compliance definitely comes into play here. I think no matter what, with any of these crypto businesses, there is always going to be some offshore jurisdiction where they're willing to be extremely, or forced to be extremely lax on enforcement or regulation altogether. And I don't think the US should ever attempt to really compete by being the easiest regime to comply within. The US has all these other advantages, like the most capital in the world, the most talent in the world, center of the global financial system. That should be more than enough to compete in crypto. And I think for companies that are operating in the US, those are advantages that we're able to use. And if there's like some cost of compliance, if you're like not allowed to do fraud, like okay, like fine, we're pretty okay with that.
So my hot take is protocol should not have a flag or a nationality. So you should build protocol in such a way that they are credibly neutral, and you can, on top of it, like build any and comply to any jurisdiction and any rules that but leave the protocol without enshrined compliance and not specific, because you can't cater to all regions and all jurisdictions. So protocol should not be unregulated, and you should regulate apps which are perhaps US-based, perhaps Europe-based, and then at the app level you do the compliance checks and you enforce the rules that are like aligned with the specific jurisdictions of that specific region. You can also have like build the protocol in such a way that you can have flexibility that is flexible enough so that you can have a compliance at the protocol level. But for instance, Uniswap, before the hook, you can create whatever hook you want with like whatever the rule that you want as well, and so you can be fully compliant for like the US regulation, but also the European regulation. And Uniswap does not have to write those rules in advance. It's up to builders on top of Uniswap to create that. Same example with like the V2 of Morpho. You'll be able to. It will be like a intent-based lending protocol. So you'd be able to say, hey, I want only to trade with people that have like KYC 1, 2, and 3. But others will say like, I want to trade with anyone, and I don't care if they have like a KYC or not. And this way you have maximum flexibility, you're credibly neutral, and you enable anyone to build on top of you.
Yeah, I really kind of align with that idea that ideally the protocols are neutral, and it would be great if we could have people operating on the same protocols all over the world and deal with localization and sort of regulatory stuff at a different level. One question that I'd have is, because the US has such well-developed capital markets and just so much capital sits here, do you think there's an angle where maybe the US's regulatory regime becomes sort of internationally dominant and people model it based on what the US needs, so you kind of solve the localization issue that way? Or do you think it'll still remain very fragmented from a regulatory perspective?
Yeah, it's an interesting question. We see this pattern in, I guess, like other areas of regulation that are super global. The one that comes to mind is like air traffic control, whereas like the U.S. sets the standards, and most of the other regulatory bodies in the world like mostly follow the same rules. But finance is one where I think different locales have different opinions on how freely capital ought to flow, how much restrictions there should be on capital formation. Even things like like incorporating a company in the U.S. looks very, very, very different from incorporating a company elsewhere. And then especially because we're seeing all these different countries kind of jockeying for position one way or another with respect to crypto, and crypto itself becoming so politicized, not just in the US, but globally, I'm a little skeptical that we're going to get some like unification of all the rules.
Right. So I think that there will be some sort of convergence among countries, because if you're at the totally the opposite of the US regulation, that means that you cut basically all your companies, and you cut yourself from the capital that you can get access to from the US, which is most of our investors, for instance, are based in the US. So a lot of the innovation and the capital you can get even in Europe or any other in another place in that planet come from the US, actually. So I think there will be a convergence. Maybe it can take some time. I think that won't be a big problem. I mean, even US regulated and public company like Coinbase are using permissionless market and permissionless protocol. Again, an example is like the Coinbase product, crypto backload product. They are using a CBBTC USDC market on top of Morpho. Coinbase is regulated in the US. They have their own KYC and compliance checks. But behind the scene, they use a permissionless protocol, and they get access to global liquidity, which allows their users to get access to the cheapest and best rates. And we have even institutions reaching out, and how can retail users get access to a better rate than what we can get in TradFi? And the reason is that you have that global access to liquidity. And you have many lenders into that, depositing USDC into that market. And so if you cut yourself on that, you're basically undermining the growth potential and the potential innovation that you could you cut yourself on that.
So maybe one other sort of question I have here is kind of how that sort of localization to different regulatory regimes in the US, but also in other places will work. Both of your protocols are permissionless, they're non-custodial, so there's a pretty strong argument that you're not performing sort of the typical regulated financial industry functions. You're basically publishing code, which is protected in most places as free speech. So I've seen, I think A16Z is known for this, but I've seen it come up in many places where people posit that front ends will be kind of the touch point where regulation from the US and from other places kind of comes into play. Do you think that DeFi front ends might be the target of regulation, be kind of treated more like a broker-dealer? Or do you think that there's some key differences between a front end and a BD that makes it not going to be where the regulation really meets the road?
I mean, I think there's a philosophical difference for sure, but I think just practically from the regulator's point of view, if you view your job as consumer protection or compliance with some regulatory regime, and then you want to enforce on some vague some vague thing that's a protocol plus a front end and whatnot, you need some handle that you can enforce on. And so in the past, we've seen going after developers of the core protocol, but one thing we've been able to do with crypto is build these systems that are truly immutable, these immutable smart contracts on the blockchain. So you can't necessarily take them down. That feels like it's part of the regulatory arbitrage landscape. Front ends in practice tend to be far less decentralized and far easier to censor than immutable smart contracts on the blockchain. And so I think that's a natural area for a regulator to look at as, if I don't like this class of activity, that's the handle I can grab and do whatever enforcement I need to do on there. of course, we know that it is possible to make effectively immutable front ends that themselves live on decentralized architecture. So I think if there's like mass movement towards enforcement against folks who are hosting DeFi front ends, then we're just going to see those also disappear into the ether. So I don't think it's going to be particularly effective necessarily. And the regulatory apparatus is just going to have to figure out how they want to deal with things that are actually effectively decentralized. Totally separate question for protocols that are upgradable behind the multi-sig, upgradable behind even something like governance. Those, I think, one can make a much stronger argument for them being custodial and controllable and enforceable in nature.
Yeah, I think it's the logical conclusion that with the previous comments, if you have like a immutable governance minimized protocol, it's just a piece of code, right? That run autonomously, etc. So how do you regulate that? I don't think it's the right way. I don't think we should, and I don't think like technically it's possible, especially if it's immutable, to have all the rules of all the jurisdictions written, enshrined, deployed, and if it's immutable, that means you can't upgrade. And regulation is something that is dynamic, that adapts over time, that adapts like depending on the region. So you can't like having everything enshrined on chain. So the only solution for me is like indeed regulating front ends that are like behind the front end. You have a company, an association, organization that is like registered somewhere in a specific region with specific rules, and this is where we should apply like the regulation, because it's like you have like physical persons behind that, and it's way easier to apply the rule that you want, but not at the protocol level. It does not make sense, and it's as if we were trying to regulate like SMTP or TCP/IP protocols. To me, it does not make sense.
Yeah, agreed. So maybe one other aspect that I find super interesting that might be unlocked with more clarity in the US. In the past couple years, we've seen a lot of developments in sort of tokenization, bringing real-world assets on-chain, letting people kind of use them in DeFi, stuff of this nature. But so far, it's mainly been basically a thin wrapper where you have a fully fledged product like a T-bill or some other sort of ETF, and then you wrap it in a token and you can transfer it on chain, but that's the extent of how much is really happening on chain. It's just being wrapped. Do you think that sort of more clarity in the US and maybe in other jurisdictions as well will let more of the capital markets process come on chain too, like kind of a more fully fledged internet capital market rather than just wrapping, assets that have already been issued and kind of serviced off chain?
Yeah, I think if we get more clarity on market structure, we're going to see a lot of this stuff just like totally explode. Security has been this dirty word in American crypto for quite some time, and there's kind of this like catch-22 where a lot of these crypto tokens or crypto projects are like, oh, there's no securities, which in some sense means like everything we're dealing with is totally valueless and totally circular in nature. And like that does not make for a good financial system, right? The financial system inherently is like quite positive sum because there's like different risk transfers and value transfers that are happening. But if the assets are all worth zero in the terminal state, then you're no longer playing a positive sum game, you're playing a zero or maybe even negative sum game. So I think it'll be a huge unlock when we bring like real securities on chain. It's unclear, are those going to be totally permissionless? We do have this regulatory apparatus in the US that cares not only about investor protection, especially retail investor protection, but also market integrity. And so, yeah, I just don't really imagine a world where everything gets like YOLO shoved onto the chain. But there's like a few properties of real assets being on the blockchain, I think, are quite desirable. The first is just the friction of moving things around on the blockchain is super, super low. Very high relative to changing entries in a database, but very low relative to the traditional financial system. So just like huge unlocks in friction and I guess like the physics of assets moving around. And the second thing is in crypto, we figured out how to deal with these long tail assets. Not to say that traditional finance will never figure it out. In fact, like it should be much easier for them to copy crypto than it is for crypto to copy TradFi. But there's, I think, a lot of potentially underserved markets that have not been digitized or like quite inefficient because of that. And it's plausible that bringing them onto the blockchain will increase the liquidity for these types of assets. So I think all of that is quite exciting, and it'll be nice to get away from this purely zero-sum meta that we see in crypto, where all the tokens are valueless, and you have to even say that they're valueless. And like, okay, so then what is the point of trading them? You have to pretend there's some utility. We all know there's no utility for any of these things. They're not money. And so, like, yeah, having real things to trade is going to be huge for DeFi.
Our thesis at Morpho is that the whole financial system will come on chain. That's for sure. There's no doubt. Just because it's cheaper, more efficient, you get access to global liquidity. You'd get better rates, better trade execution, and it's running every day, the whole year. So there's no doubt on that front. I think right now institutions are coming more and more on chain, but there's like some hurdles that prevent them to move fast. So of course there's the regulation that is becoming clearer. So on that front, it's better and better. There's also as I said previously, the education part where they need to form and teach their employees about that tech, which is new, and there is still like a lot of paperwork and and also right now, I mean, we are tokenizing money market fund on chain, but then there's no use case on chain because there's no liquidity, not enough liquidity to lend against those assets, etc. It's usually two-sided marketplace, right? So you need to okay, we tokenize asset, now let's create the use cases on chain. This is something that we've tried to do with Morpho, where now there's you can put S sacred, so tokenized money market fund from Ippolito fund, and it's the Polygon organization that borrows against this USDC and leverage to get access to the yield from the accurate money market fund. But that's just like the baby step, the first like proof of concept. Now we need to scale that, get to a point where we just have to repeat that playbook and onboard any fund that want to do this, and at some point it will be just a common practice, and we'll be able to scale this and bring a lot more new, fresh liquidity on chain. So it will take time. I don't expect this to. I mean, I expect this maybe to take 1 or 2 years to do that, but everyone is talking about it and is willing to do it, and asking also how they can repeat that. So this is a great thing. We just need to execute and do our part to educate those.
Do you worry about what happens if we take like all global assets and we put them onto this like permissionless leverage layer that's like super commingled?
Sorry, I didn't get the question.
So we're going to take all the assets in the world and then we're going to put them into like one giant pot of leverage. Do you worry about like what could happen if we do that? So
that's a good question. I think it's too early to worry about that. I think it's a potential. The thing is, because it would be on public blockchain, or at least like you have like much more transparency than on like the current traditional financial system, you'd be able to spot that and raise the alarm much earlier than you can do in like right now in TradFi. So if the whole financial system is over leveraged, at least we'll see it, and not at the last minute.
I'll pop in too. I think the transparency aspect is far and away better than it is in traditional finance. So I feel like regulators should actually, in some ways, prefer that because they'll have much better line of sight into kind of where leverage is building up in different parts of the system. And then also, you know, a lot of finance is like there's so much sort of credit extension between counterparties because stuff doesn't settle atomically. You know, one half of a trade will settle and then basically the other person owes you money until their leg settles. And in, you know, financial crises, suddenly nobody trusts each other and the whole economy seizes up because that sort of extending credit to your counterparties doesn't work. So I think functionally, like, there's a lot of benefits we can get out of permission.
Yeah, transparency makes sense. I just worry that, you know, crypto is always incentivized. One, taking on way more complexity, and then two, taking on more risk. There's always this, like, kind of well, a lot of teams are willing to take on risk to grow in the short term. And so, you know, already within crypto, we've seen things like that go wrong or maybe even very wrong. And when those things happen, I'm grateful that crypto is not dealing with real assets. And so, you know, who knows what happens when we do.
Yeah, there's not really do-overs in crypto. Like when money's gone, it's gone. So I think technical risk also is challenging for sure. So we're coming up on time here. I guess maybe to close up, I'd be curious if you guys could share what you think is like the 5-year vision of how DeFi is going to develop in a more kind of regulated context. Do you think we're going to have a lot of convergence between DeFi and Wall Street, or do you think that there's kind of still going to remain like parallel systems, or, you know, kind of any other thoughts you have about the next couple years?
I think it's not really possible to predict anything on a 5-year time horizon in crypto. Over the next year or so, I think the pretty clear themes are increased adoption of stablecoins, both in the US and around the world. We're seeing tons of traditional institutions, you know, really getting into crypto. I think to them it's like pretty clear that there's like huge downside risk if you're not participating. And then, yeah, I think a lot also is going to hinge on this market structure bill, what ends up in it, and if it ultimately gets passed.
Right. So, as I was saying previously, I think like the whole financial system will undoubtedly like go on chain. That's for sure. Within a 2 years time frame, like 5 years, I agree. It's a bit long. 2 years time frame. I think any large funds will have like at least tokenize their fund. That's for sure. I expect also to have companies, like large companies, originating bonds on chain. So not tokenizing, but like on-chain origination. I think this is a big step that we need to have, so that like the financial system can like go faster on chain. I think like by 2 years, all fintechs will have like in the back end DeFi, just because it's much more efficient. You provide better experience, better product to your users. And if as a fintech you don't take the leap, you'll lag behind. I'm pretty sure of that. I think wallets and fintechs will converge into the same category. So fintech will integrate wallets and all the features that come with it. And wallets are understanding that they are not just a gateway to DeFi, but they have customers, and if they embed the classic fintech features, they will retain more users and will be able also to monetize. So I think I see a big convergence of all actors. Some will be faster, like centralized exchanges and fintechs, and some others will will do step by step because of their regulation constraints, and they have like a reputation, their reputation at stake. But it will come, and we're already seeing the demand.
Awesome. Well, I think that's good as place as any to wrap up. Thanks everyone for stopping by.